Imagine applying for your dream home and getting rejected because your credit score is 14 points too low. Not 1 or 40. 14. That's the difference between holding the keys and holding back tears in a bank parking lot. Most people think fixing their credit takes years, but the truth? You can boost your FICO score in weeks, sometimes days, with a hack so simple you'll wonder why nobody told you sooner. First, let's kill the myth. Your credit score isn't some mystical number the banks pull from a crystal ball, it's math. And like any formula, once you understand the variables, you can game the system, legally. The biggest chunk of your score, about 35%, is payment history. That's the "did you pay your bills on time" section. If you've been late, no hack will erase it overnight. But that's not the lever we're pulling today. The second biggest chunk, about 30%, is credit utilization. This is the secret weapon. Credit utilization is the percentage of your available credit you're using right now. If you have a $10,000 total credit limit across all cards and you're carrying $5,000 in balances, your utilization is 50%. And to the FICO algorithm, that looks like you're living dangerously close to the edge. Here's the kicker. You can pay every bill on time, but if your utilization is too high, your score tanks. Drop that utilization and your score can jump fast, sometimes within the next reporting cycle. So here's the hack. Increase your available credit without increasing your spending. Step 1. Call your credit card issuers and request a credit limit increase. If you've been paying on time, most will say yes. And they don't run a hard inquiry if you ask first. Your $5,000 limit becomes $8,000. Your utilization drops instantly, even if you haven't paid off a dime. Step 2. If you have savings, make a lump sum payment toward your balances right before the statement closes. Why? Because that's the balance the credit bureaus see, not the one after you pay in full later. Lower statement. Balance equals lower utilization equals higher score. Step 3. Add yourself as an authorized user on someone's card with a long, clean history and low utilization. Parents, siblings, trusted friends. Their good credit habits get copied into your file, and boom, your score jumps. And yes, this works even if you never touch the card. Because in credit land, optics matter more than reality. Now, some of you are thinking, why not just close old cards I don't use? Because that's the credit equivalent of throwing out half your parachute mid-jump. Closing accounts reduces your total available credit, which raises utilization, and your score sinks. Same goes for opening a bunch of new cards at once. Every hard inquiry dings your score, and too many new accounts at the same time make you look desperate. And desperation is not a vibe the FICO gods reward. Another overlooked factor? Reporting errors. 1 in 5 credit reports has a mistake serious enough to hurt your score. A debt marked as unpaid when you've paid it. Or worse, someone else's account tied to your name. Pull your free annual credit reports, scour them like you're searching for a hidden treasure map, and dispute anything wrong. Fixing just one error can cause a bigger score bump than months of careful spending. But let's be real, the fast hack is only half the battle. If you want to keep that score high, you need to stop doing the things that drag it down. Pay at least the minimum on time, every time. Keep utilization under 30%, under 10% if you want elite status. Don't apply for credit you don't need. And remember, your credit score is basically your financial reputation. It decides whether you get the loan, what interest rate you pay, even if a landlord says yes to your application. This is why the hack works so well, because it manipulates one of the most heavily weighted parts of your score, quickly and cleanly. It's not magic, it's math. And math loves people who understand the rules. I've seen people jump 40 points in a single month just by combining a credit limit increase with a strategic mid-cycle payment. That can mean the difference between a fair score and a good one, or qualifying for that 3% mortgage instead of the 5% one that bleeds you dry over 30 years. Here's the funny part. Lenders don't care how you got your score up. They don't see you frantically paying down your balance the day before the statement closes or begging your credit card company for a limit bump. All they see is the number, and numbers open doors. So while other people are busy believing credit score improvement takes years, you can quietly pull this lever and walk into your next application with a score that looks like you've been responsible your whole life. But be warned, if you treat the extra available credit as free money and max it out again, your score will nosedive even faster. The hack is a lever, not a license to spend. Use it right, and you can go from rejected to approved before your next credit cycle hits. Use it wrong, and you'll be right back in that bank parking lot, wondering why the pizza tastes like financial regret.